All right. What is up, traders? What's up, tycoons? Coming at you guys with a viewer request for an update on nano dimension. We're going to take a look at the daily chart. All right. Give you guys an update after the last video. You can see, we're starting to break this structure here a little bit. We'll go ahead and provide a nice update. Now, if you're not familiar, Nano Dimension is also one of the latest companies to really be taking advantage of the AI bubble forming right now and really capitalizing off of the AI hype and different things like that. They're starting to promote that a lot more. We'll dive into that. Not only are they about 3D printing, but they also are implementing AI. All right, we'll go over a bullish count scenario, and then we'll also go over a bearish count for you guys as well. And we're going to use today's sponsor, Simply Wall Street, okay? And we're actually going to use them to dive into the fundamentals a little bit. You can see many different things about the fundamentals of any stock, really, on Simply Wall Street. There'll be a link in the description or a pinned comment down below, and you guys can get a 14-day free trial to not just look up Nano Dimension fundamentals, but you can search your favorite stock on there, or maybe some stocks that you're looking at investing. And it's a really great platform that will make it easy for you guys to be able to understand fundamentals a little bit and break things down with some nice visuals. So make sure to smash that like button, subscribe to the channel if you guys are new. All right. And we're going to go ahead and jump into it. But before we do, the content provided in this YouTube channel is for informational and educational purposes only, and is not intended to be relied upon as legal, financial, or investment advice. Myself and any individuals on this YouTube channel are not registered financial advisors or brokers. Trading in stocks, bonds, commodities, and crypto involve a significant risk of loss and is not suitable for all investors. Now, let's go ahead and get into it, and let's go over some of the charts. Okay, so we're going to break down the charts first, and then we'll hop into the fundamentals. So we had this head and shoulders pattern that played out very clearly, and honestly, we're not going to be bullish on Nano Dimension until we break above these three levels in particular. All right, and I'll explain why very briefly. All right, this is the 61.8, 50%, and the 38.2% retracement level. These are the three most common and well-respected Fibonacci retracement levels, okay? And so, the reason that those are important is because nothing moves in a straight line down and nothing moves in a straight line up. What you get is you get a move down, a retracement, and a continuation of that trend, or you get a move up, retracement, and continuation of that trend, right? And, we did end up putting in a double bottom here and getting a nice bounce, okay? But if you take a look, we had this move down here recently, right? And we retraced up to our 61.8% retracement level at 290. And, we ended up heading back down. Now we put in a double bottom, and rather than putting in a low and a lower low and starting a downtrend, we did get a double bottom bounce here. But ultimately, we're not going to be bullish until we can break above those three levels. So above 290. And if we can flip 290 from resistance to support, we have the chance of being bullish, above there and looking to get a reversal, right? Because not only do you use the fibs to identify that trend continuation, but you can also use it to spot a reversal. Let's say you move down, you retrace, and you start to consolidate, okay, and break through those retracement levels. You can spot a potential upside reversal. So that's what we're looking for. Anything below 290 is still all just healthy retracement territory. You can see we've started consolidating, but we really haven't broken out past 290 and been able to flip that to resistance from support. Now, below 290, we have 280 and 270. Those are our other major retracement levels. You can see, after the move down retracement, we headed lower, and we're starting a new trend now where we're putting in these lower highs, right? We have a high here, we have a lower high here, and now we have a lower high here. And if you're going to be bullish on this, you do not want this to turn into a lower high. Rather, you would want this to make a higher high somewhere up here in this area, above the 270 region, right? 270 or above is what you're going to look for. And then you're going to look for the low here, higher low, and you'll look for a higher high and then another higher low, right? So, that's what you want to look for when it comes to Nano Dimension right now. If things do go in a bearish manner and we're not able to get a bullish reversal above that 290 and potentially retest some of the previous highs in that $3 price range, then there's a strong likelihood we're going to come down to 228. We have a little small demand zone here as well. Right around 220 that I gave you guys in the last video, as well as a major level right here, right around 210 to 205. And ultimately, if we break below these, all these demand zones right here, 187 is going to be the final bearish price target. Now, the MACD, which is going to be right here, along with the RSI, are pretty useful. Okay. And I'm going to show you guys and teach you guys how to use these really quickly. Let's start off with the relative strength index. Now, most people know simply overbought and oversold conditions. So there's this dotted line right here. Okay. This red line right here, this is 70. And this is the technical definition of overbought. Now, just because something is overbought does not mean it can't go higher, right? A perfect example, if you take a look, we're overbought here and we put in highs. But what did we do? We ended up going higher and making higher highs. But if we look at our RSI, we actually put in a high there and then a lower high, right? So if I clear off some of these drawings, you can see that we're actually putting in lower highs now on the RSI and losing relative strength, right? That's what your RSI is. It measures the relative strength index, and it's going to measure the relative strength of any stock at its given price. So when we're creating a high and then a higher high, you should see the RSI continuing to trend upwards as well, an increase in strength. Sometimes it doesn't, and that creates something known as bearish divergence, right? And we got a clear bearish divergence right here, and we saw a very strong pullback afterwards after we got that bearish divergence. And take a look at how when each time that we've rallied, we have not been able to break out past this bearish divergence trend line, right? Even again, most recently, we got smacked down right on it. Even when we had this big bullish engulfing candlestick, right? This candlestick opened below the previous red one, closed way above it. That's a bullish engulfing candlestick, and you should see bullish continuation. And we already came down and went lower than the open of that candle. So we're not seeing much follow through, okay, from the bulls, and we really need to break out past this bearish divergence trend line, but we need to be cautious of a look above and fail, right, and a false breakout. And the reason that's going to be important is because you want to see a breakout retest and it be able to at least move sideways or continue heading higher, right? We want to, if we break out here on the RSI, we want to hold relative strength or increase in relative strength rather, okay, then that false breakout with a look above and fail. Okay, and the reason it's significant is because on this breakout and retest, buyers, aka bulls, are really presented full opportunity to step in with demand in the market and really show that they're in control and push price up higher. And if they're not able to, a false breakout, a look above and fail is going to show you guys that actually bears are in control and they're the ones controlling the price action, and it's going to be a bearish indicator. We could see a drop down to these demand zones. So definitely pay close attention to that. The other thing you want to learn how to use is the MACD. And you can use this to spot potential entries and exits, right? So the main thing you want to pay attention to is this red line. When you see it cross above the yellow line here, you see we end up getting a buy signal, okay? And we have a strong move to the upside. And then when it crosses down below the yellow line, so when the red line crosses below the yellow line, you can see we have a strong move to the downside, right? And same thing over here, we see it cross back above the yellow line and we got a strong move to the upside. And then here, it looks like it's about to curl down, guys. So we need to be very cautious. Now, it hasn't happened yet. There is still the possibility that this thing can curl back upwards, okay? So definitely keep that in mind. We have not gotten confirmation on that. But you could even call this a little tiny baby head and shoulders right here, right? Left shoulder, we have a head, and then we have a right shoulder here. And ultimately, this little trend line right here would be our neckline, okay? So if we break this, there is a chance that we could end up having a head and shoulders right here that you need to be, cautious of and prepared for. Okay, especially if you're trying to go long on this. But it doesn't mean that things have to go south, right? We can get the breakout of that bearish divergence trend line. We can see the MACD curl back up above this yellow line. But these are just some, things that you honestly you need to be prepared for. Now, markets tend to move in 5-wave and 3-wave structures. All right. I'm not going to go too deep into that, but that also ties in with the Fibonacci's. And so what happens is, the prevailing trend is typically a 5-wave move, and then you get a ABC structure, corrective wave, right? And so if you take a look here, we have a 1 down, 2 up, 3 down, 4 up, and then 5 down here to complete our bearish structure, okay, that we really had in August of last year. It completed around December, and lots of stocks were very bullish in the beginning of the year, and we can see the same thing with Nano Dimension. But this could be an ABC correction up that topped out in March. And if that's the case, we could possibly be in the middle of a 1, 2, 3, 4, 5 back down to that $2 to $2.28 price range that I was really just explaining. So, that's not the only possibility, okay, but that is a possibility we need to pay attention to and be cautious of, and really pay attention to those signals on the MACD and the RSI. Now, another possible scenario is going to be the bullish count, okay? And so this would be a little bit more optimistic for the bulls, okay? Because if you take a look, we have put in a low and we have put in a higher low, right? So we do have a little bit of a short-term uptrend, but and we've also put in a high and a higher high, but we really need to get this wave 5 up here and put in a new high, all right, up above 310 up and towards that 320 region, okay? At least, right? That's what we would be looking for. If we take a look, right, we have a 1, 2, 3, 4, 5 up here that seems to have gotten topped out. And then we got an A, B, C, a 3-wave correction. And we have a wave 1 up, a wave 2 down. All right. So it's very possible, that we could be seeing the bullish count. All right. And that would take us up, again to that $3 to 320 region. Preferably, we need to put in a higher high above these recent highs that we hit here in March. All right. To really kind of give us some confirmation of that. All right, so this is, a bullish 5-wave count right here that we could be in. And then this right here would be the bearish 5-wave count. Okay, I'm not Nostradamus, so I'm not going to come in here and tell you guys exactly what it's going to do and that it's, for sure going to go up, for sure going to go down, but rather, try to teach you guys something so that way you can understand market structure and market movements a little bit more and, be prepared for either scenario, whether you're looking to do some short-term trades or maybe you're looking at it from a long-term perspective and you're wondering, hey, should I buy here or could it potentially go lower? Or, am I looking to buy here and it can go higher? Different things like that. Okay. Now, we're going to use today's sponsor, Simply Wall Street, as I mentioned, to really dive into the fundamentals a little bit more because technical analysis is all nice, but fundamental analysis is also important. And if we take a look, all right, the volatility. All right, compared to the average market volatility, nano dimension is more volatile. All right, and it's also slightly above the industry volatility as well. Okay, but it's not significantly more volatile than the rest of US stocks, and it's not really that much significantly higher than the other industry stocks as well. So it's just slightly above, nothing too dramatic, right? It's not extremely volatile and it's not super low volatile. But if you take a look at the return versus its industry, it has underperformed the US tech industry, which returned 21.6% over the past year. And the return versus the market has underperformed the US market, which returned 4% over the past year. So that's definitely something you need to consider. Now, when you look at the market cap, it's below $1 billion. Okay, it's about $627 million. I did get into this stock here recently, and I told everybody when I sold out, it was part of the 50K portfolio challenge that I've been running for a while, and just kind of going, showing you guys what I'm doing with 50K in an account and how I'm trying to, manage that through the entire bear market we had in 2022. We can look here. All right. It's got a price to sales ratio of 14.4. It's got a negative 2.8 PE ratio. They just reported earnings, I believe, here recently. If we take a look, okay, I mentioned the market cap 627.95 million. All right. One of the reasons that I got into it, which it's actually a little bit hard to see right here, but the liabilities and equity, okay, this thing has $1.2 billion. Okay, it's got $1 billion in cash. So when you think about a company that has $1 billion in cash and it has a market cap of 627 million, that to me screams undervalued, right? And maybe not even undervalued, but necessarily more of an arbitrage moment, right? Where it's like, okay, hey, well, they're saying this company, the market is valuating this company at less cash that it actually has on hand, right? So, that was one of the main reasons that I got into it. And it was a nice little trade. Now, if you look at the price to sales ratio versus its peers, okay, we can see that Nano Dimension is expensive based on its price to sales ratio compared to the peer average. And if you look at the ratio, the price to sales ratio compared to other companies in the US tech industry, it also is expensive in that area. Really one of the best, strong suits of nano dimension is the financial health. Okay. And largely due to that balance sheet right here. It has a total shareholder equity of 1.2 billion and a total debt of 1 million, which brings its debt to equity ratio at about 0.1%. Its total asset and liabilities are 1.2 billion and 53.2 million respectively. So from a financial health standpoint, it looks really, really good. But some of the other things, don't necessarily look the best, right? If you look at the valuation, according to Simply Wall Street's metrics, okay, it gets a 0 out of 6 on the valuation score. We took a look at the price to sales versus peers, the price to sales versus industry, but there's many other things that you can dive deeper into on the platform. Remember, that's today's sponsor is Simply Wall Street. And if you use the link in the description or the link in the pinned comment down below, you guys will get a 14-day free trial and you can dive deeper into Nano Dimension. All right. But you can actually, what I want you to do is look up your favorite stock right now. Okay. Whether it's Tesla, whether it's Palantir, whether it's NVIDIA, maybe you guys are interested in things like Fubo. Okay. Stuff like that. Simply Wall Street is a really great platform that's going to break things down simply for you guys. And the first 100 people to join will actually get up to a 40% discount on their purchase, right, of the membership. So it's really not expensive either, in my opinion. I think it's maybe like 100, 200 bucks, just depending on, if you guys get that discount or not. And, that's a pretty fair value to me for a year membership. But, at the end of the day, it's something that I've been using for a while, and I'm definitely glad to have them as a sponsor now. So, if you want to support the channel, definitely do that by using the link and signing up. Now let's go into the AI a little bit. Okay. So, as I mentioned, they are into AI and they are speaking about it more. It's not pretty much, just an AI company, but they are into it now. And it's called Deep Cube. Okay, that is essentially their AI thing. And they're trying to use it to promote unrivaled data speeds. Okay, Deep Cube's proprietary algorithms increase the speeds of data analysis tenfold, making it the only hardware performance accelerator of its kind. Also, promoting memory usage reduction from data center to edge. It also enforces distributed global automation. AI turns machines into nodes, and DeepCube transforms 3D printers into a viable global solution for the demands of Industry 4.0. Now, a lot of the terminology they're using here, I've seen this before, and it's a lot of good marketing. Okay, like with cryptocurrency and a lot of these DeFi protocols, they're all promoting Web 3.0, and they're essentially using AI and their 3D printing to promote Industry 4.0. Deep Cube is production minded and can coordinate multiple machines across a lab or across the world, and it's learning across the networks. The machines share learning influences with each other for immediate adjustments in production flow. And it's also got real-time error detection and correction. DeepCube applies the same neural network training behind photo and speech recognition advancements to the manufacturing of parts. This will lead to improved part quality with multiple sensors that can spot defects too small for the human eye and increase part yield with AI-driven decision-making, correcting printing errors in real time. So essentially that's it for today's videos. Just wanted to give you guys an update on Nano Dimension, speak a little bit about their AI, go briefly into the fundamentals, and give you guys a really nice breakdown of the charts right now. And hopefully you learned something new and you appreciated this video. If you did, smash that like button and subscribe to the channel for more.